What's going on, guys? J Ro here, and I'm just gonna be showing y'all how to analyze a market for beginners, pretty much. So, what you want to do when you first get on the chart? Today, we charting the. This can go for any chart, anything that has a value that fluctuates, that's on a chart, that's on TradingView. Pretty much use this strategy for that. This is like the baseline for in stock traders and how I just pretty much analyze markets in general. So I start from like the weekly time frame, then I pretty much break it down all the way to like the 1 minute time frame. So I know it probably all don't make sense right now, but this is just how candles work. So depending on what time frame you on, the time frame is very important because the time frame is the candles pretty much, or the time frame are the candles, whatever. But for the 1 minute chart, each candle is literally represents the price every minute. So basically, each one of these candles represents 1 minute, or if you changed it, 5 minutes, or 15 minutes, or 30 minutes. Each one of these is 30 minutes now, to all the way up to the daily. So you want to use the daily time frame because it's a big it's just like everything smashed together. So everything that's happening from the 1 minute to the 15 minute to the 30 minute to the 1 hour is pretty much all candles. So each candle is basically like telling you something. So it's telling you where a price went. And when you trade in, that's the most important thing about trading. It's just knowing where price is, knowing where price is going. So if you see that purple line on my screen, I can make this bigger. That purple line just represents a strong price level on the weekly time frame. So if we trade in and price goes below this important level, you pretty much just looking for shorts, because anything long is just gonna be like it's not gonna be much long volume. Besides, right there, that was a lot of volume. But this is just on a daily time frame, so you can see that the daily time frame, it didn't go over this level since 2020 all the way, and it broke through at 2022. So for 2 years, the whole pandemic, this was the pandemic. This this thing, this from here all the way to here, that's the pandemic, pretty much. That's where the U.S. economy was going, pretty much. So U.S. economy, COVID locked everything down, value the dollar, nobody's working, everybody's at home. So we're not putting out any, we're not making no money, pretty much. We're not progressing as a country. The country is really progressing when it's a lot of people working. All the companies are doing well. That's like hold the value of U.S. So, say for instance, Apple. If Apple's doing really well and it's a U.S. Economy stock company per se, then that company will, you know, it'll show pretty much. Or like any one of the top 500 companies in the U.S. or that's publicly traded. Publicly traded meaning that you can trade it. Anybody can trade it. So if you don't know what private equity is, private equity or just private companies in general are companies that aren't public. So you can't like invest in them. You can't give them no money. They can't give you no money. Pretty much, you can't mess with them at all. Pretty much, because it's private. You got to be an acquitted investor. Basically, you got to be somewhat rich. You got to make like 250,000 and above annually, and then technically you're an acquitted investor. So what I just drew right there is a trend line. So this trend line is basically identifying this big uptrend. An uptrend is basically when candles are making higher highs and higher lows. So the higher high at the beginning of this yellow trend line is boom, just this price action right here is a perfect example. So you see how this price action is just going up, 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 which is bullish. And then you got one red candle, another red candle. And it's on a daily time frame. So every day the price closed above the previous close for since March 31st, 2022. It's been going up pretty much. Then it broke our purple line, which I showed y'all in the beginning. Is very important. It's a very important structured line. Like that line is like price goes below above it and closes, which it did right here on the daily time frame. Then it went back, rejected this level, which was the previous high, that red candle, these two red candles. You see how it came back down. Then took a lot of the people that was buying out. So if you was buying above, you bought here, your stop loss was at this high, then it would have took you out. But if you were following price action, you could have seen this big rejection and got back in. Depending on your system and your bias, why you would have placed a trade. My trading methodology is pretty simple. Trading methodology is just basically how you trade for beginners if you don't know. So, simple strategy right here. Goes to the trend line, pretty much not really there. You've probably been in the trade already. Once it rejected the trend line there, you could trace that trend line all the way back down here. Okay. Basically, we just following the price, literally just following the price. So boom, rejection, that's one. I'm gonna put an arrow at the rejections of that trend line so y'all can see them. Boom, that's two. And that was two rejections. And then boom, big breakout. This is the trade. This is the short trade that you would have taken. So if you were like a long-term trader, like maybe like placing like 10 trades a year or something like that, that was the trade right there. Boom. As soon as it broke out of the trend line, you gone. So you would have placed a sell after this area confirmed. And look at the price action. Price action is, so when this is what differentiates a small candle from a big candle. Let me just exit that. Okay. Small candle from big candle. So these two candles, these three, been really huge. And then the wicks basically tell you price went there, but it didn't stay there. Like it didn't close there. That's what a wick is. These little lines in between the candles. So price went below it, broke below that trend line that had been holding for so long. It broke it right here too, though. It broke it here too, twice. And then it said, nope, I'm not going that way. It went back up. It stayed with the trend. So it was doing that for the whole 2020 pretty much. Well, it was doing that since early 2020. It's been rejecting. I would say since this bottom low, technically, it's been rejecting the trend line. Boom, boom, boom. Pretty simple, right? So the pair that I like to trade the most is in confluence with the US dollar. So basically meaning they work together. They're not working together, but they kind of move similar. So in Forex, the value of a currency, basically, that was the currency. That was US dollar. That was the big giant US dollar bill. That's the currency pretty much by itself. But when you pair it against another country's currency, so basically per US dollar, you get 10 Swedish kronas. That's the conversion pretty much. So if you got a dollar and you go to Sweden and you want to transfer it to a Swedish krona, they'll give you 10 Swedish kronas for your one US dollar, which represents the exchange rate, which is these numbers over here on the top left. So if you look at USD SEC and US dollar currency index, they pretty much in confluence. So this is around the same time frame. But you see how this one was just going straight up, and then US dollar was going up and then back down, then up, then back down, up, then back down. But you can still draw the same line though, because we're still dealing with the US dollar. The main currency, US dollar right there. US dollar currency index. They should just name it US dollar. But I guess I'm not in control of who's putting this stuff on the charts anyway, so. But yeah, we already pretty much 10 minutes in the video. So this is the basic structure that you need when you analyze in the market. You don't want to place no trade on the 30-minute time frame or the 15-minute or the 5-minute if you're going against the trend, unless you trade in reversal. So the trend is going up and you want to trade because you know it's not going to go up just straight up in the air. So if you can pretty much analyze or know when it's about to do that little dip before it goes back up. It's kind of a risky trade. So if you're pretty much in a long-term game, I mean, if you got a strategy for that, then by all means do it. But pretty much my simple, easy to use strategy that I have at Instock is we trade in the trend. So a lot of my indicators represent just showing you trend, showing where price action is going. Price action represents the strength of a trend pretty much. So if we go back to the US dollar, you're going to see a lot of bullish price action versus bearish price action. If you look how clean the bullish price action is, bull just mean up, bear just means down. So bullish means it's a lot of bulls, a lot of prices going up. Bearish meaning everything, a lot of crashing. It's just everything's crashing pretty much. So look at the bulls in this since it started. Boom. Look at that. Then it came back down. Didn't go stop you out at that level. Boom. Kept going horizontally kind of. Boom. Barely bearish momentum going down. Then it went all the way down to that. You could have bought again right there. You would have stayed in the trade. It wouldn't have taken you out ever if you stayed in that trade. Even till now. If you was holding that till now, you still been in that trade right there. That's one trade. But you see the price action is bullish, but it's going crazy bullish though. Like, look at that. That's 5,000 pips, 5% technically. But that same move would have probably been like 10,000 on USD SEC. So we can check it right here. But I'm going to draw that trend line. Look at the beginning. Zoom in. Bear with me. I'm just working on my laptop. I don't have all my other monitors set up, but y'all don't see that anyway. So here we go. Test the strength of it again. Boom. 5,000 pips. Stayed in it. Rejection. Went all the way back up to this. But do you see how the relation to that's 1,400 pips, which is that number right there, or 14,000, excuse me. Do you see how price goes up, then comes back down, but it respected this trend line, which represents the overall trend. And you can do the same thing to the downside. It does the same exact thing. That's pretty much how you identify a trend with Instock. My name is J-Ro. This video will be going on YouTube, and I'm going to try to get on my TradingView platform as well. Subscribe to the YouTube channel if you like the content. Leave some comments if you got any questions, you want me to see me do any videos, or just you want me to chart a Forex pair. Just you could DM me at JROWBEE on Instagram, or Instock at INSTOCK 247-365. But that's how you analyze a trend with J-Ro from Instock.